push yourself because no one is going to do it for you. Learn something new which will help you in your hard time of your life. Share market is a place where you can earn so much money by just sitting at home. For learning the share market, you should understand fundamental analysis, data analysis, and technical analysis. The main motto of this learning should be only one: when we have to entry in share market, when we have to exit from share market, means when we have to buy a share, when we have to sell a share. In today's session, we are going to teach you about technical analysis. We will start from beginning. What is technical analysis? How we can work for technical analysis. In this video, there will be two parts. In first part, we are going to understand what is technical analysis, what is candle, what is chart, what is the reason to use the technical analysis, fundamental analysis and technical analysis, what is the difference between both, and also we are going to touch the candlestick pattern. In the next video, we are going to understand chart pattern, indicator, resistance and support, and time frame. So these are the video where you can understand much technical analysis. In technical analysis, we should understand what is candle and what is the chart. Let's understand candle. What is a candle? In a candle, there is two things. Candle means price. The movement of price will be formed in candle, and we can understand the price by this format. If price open, for example, there is one stock and the stock name is, for example, Apple. Apple is a stock. It's traded in US market. Let's understand the price of Apple start at $100 and it's go down till $90. That means when the price started, there are some seller, they push down the price to downwards and it's come to 90, and after that there were buyer here and they push up the price and it's go till here. That means it's go till 120, for example. And in the evening session, when market was going to close, it's come down here. That means it closes on 110. It's not high, it's close. CLOAC close. That means this price 100 will be known as the open price, 90 will be known as the low price, 120 will know as the high price, and 110 will be known as the close price. So this is a candle. When the price open below and after that when price goes up, this is known as bullish candle. Means price go up, buyers are here. The sentiment of that particular time was buying sentiment. That means buyers are willing to purchase that stock. In opposite, if you go when the price start at upper side, for example, here price start at 110, after that price goes up and it goes to 120, but after that it's pushed by the seller and price came down to 90, and in evening session if price close down at 100, that means opening price was here, high price was here, low price was here, and close price is here. That means there is a sell sentiment. Means after opening price goes down. That means there is a sell sentiment. This is known as the bearish candle. So there are two candles. When buyers are active, there will be bullish sentiment and candle will be made bullish candle. When the sell sentiment, that will be made bearish candle. Hope you understand. If you go in that candle, this will be known as the body. This will be known as the body, and this side, this will be known as the wick, or we can also tell it upper shadow. This will be known as the wick, or we can tell it lower shadow. That means the main price movement was this. This was the close price. This was the open price. Price was open here. Price close here. Close here. That means this was the main movement of the day. But during the day, it's also come here. It's also go here. That means this will be shadow. This will be shadow known as the wick. Lower shadow, upper shadow, and this will be the main real body. In the same bearish candle also, this will be the body, upper shadow, lower shadow, or upper wick, lower wick. In normal way, if the wick is big, for example, this type of candle or this type of candle, if the wick is weak in downwards, that means there will be stronger bullish sentiment. Means buyers are here. Price came down till this point, but buyers are here. They pushed up the price and price goes up, and due to this candle has been formed. So that means this is a bullish candle. Similarly, the price goes till here and then it's closed at here. That means the shadow, lower shadow is bigger. That means there will be the bullish sentiment. So whenever you see this type of candles, you always understand we should go to buy the share because these are the bullish sentiment candle. Similarly, in opposite, if the wick is higher, wick is bigger at upside and body is smaller, then this will be the bearish candle. That means sentiment will be bear. So these are the candles. So hope you understand the candle. Now let's understand the chart. When so many candles plotted at one chart means there is this candle, this candle, this candle, this candle. For example, we are using 1 day chart. 1 day chart means the one candle has been formed for 1 day. In 1 day, this, open price here, high price here, low price here, close price. So this is the 1 day candle, 2nd day candle, 3rd day candle, 4th day candle, 5th day candle, like this. If there are various candle and it's plotted on a chart, so this is known as a chart. Means there are various candle which are plotted on a software. In a software, that software will be known as a chart. Okay, so chart means the homeland of candles, where various candles are there and they are plotted and they are forming something. For example, if you see here, there is one red, second red, and there is some indications here, then we can sell here. Seeing first candle, second candle, we can sell here and put stop loss here. This is the one green, second green. After breakout, we can buy here, put our stop loss here. So that means these candles form on a platform. That platform uses chart. Homeland of chart, homeland of candles is known as chart. So these are the candle and chart, and for technical analysis we should use this candle and chart and their formation, how they form. This is important. Let's go in the next slide. Why we use technical analysis? Result to use technical analysis. See, there are 3 types of analysis in the market. In first analysis is known as fundamental analysis. Second analysis is known as data analysis. Third analysis is known as technical analysis. Okay, fundamental, data, and technical. These are the 3 formats. Normally, one investor use this fundamental, but when we are a trader, what is the difference between investor and a trader? Investor means if anyone invests X amount, for example, you are going to invest $1,000 in a particular stock, and you are thinking that when that stock will go till $2,000, then I will going to sell that stock. That means you should understand the fundamental of that company. For example, if you are an investor, then in Apple company, example, in Apple company, you should understand who is the director of this company, what is the net worth of this company, okay, what is the cash flow of this company, what is the margin, profit margin of this company, okay, what is the sales growth of this company. All the things you are going to understand, and after that you are going to buy this share at $1,000 and you are waiting for $2,000. In this analysis is known as the fundamental, and the data what we understand is known as the data analysis. But as a technical analysis, we understand only trend. That means if market is upside, we are buyer. When market is downside, we are seller. And when market is in sideways, we are not going to trade anything. For example, if you see this chart, what we understand? This is a completely downtrend. Okay, we are not going to understand the fundamental of this company. For example, this company is Tata Steel, is traded in India. So we are not going to understand the fundamental for this technical analysis. We are just understanding if all these candles are forming in downwards, this is known as downtrend. And in technical analysis, we are going to sell here. After this breakdown, we are going to sell here, our stop loss will be here, and we are going to book this profit. So the reason for understanding the technical analysis is only to understand the trend. If we understand the trend, that means we understand the technical analysis. Okay. For understanding technical analysis, we should use three things. First, we should learn about candlesticks pattern. That means this is candle, one candle, two candle like this. Then we should understand why this candle body is small and wick is bigger. Why this candle body is downside, wick is upside. So we should understand the candlestick pattern. Okay. So in a particular moment, if we see here, after formation of this candle, market came downside. That means this is called as the shooting star candlestick pattern. So there are so many candlestick patterns. Total 18 candlestick patterns are there. Main candlestick pattern. So total 18 candlestick patterns are there. In this at least 18 candlestick patterns, some candlestick patterns are made for one candle, some made from two candle, some made from three candle. There is three candle like this. So we should understand the candlestick pattern. We will learn in our next class more about it. So second thing, we should understand the chart pattern. Means behave of chart. For example, if we take the example of this only, so then this, for example, the sellers are here, they push the market to downside. After that, buyers are here, they take the market to upside. After again, market come to downside, and here buyers were available and they just start buying and market came to upside. That means if this line will be crossed, that means when sellers are here, they just sell the share and price came down. That means money of these sellers started losing, money of the share started burning. When buyers are here, they start buying and they take the price to upside. That means the strength of seller was less here, strength of buyer was high here. Again, seller start active and they start selling. That means they sell here, they sell here, they sell here, they sell here, they sell here. At some point of time, sellers will be demotivated. The strength of seller will be low. And at that point, when market came down again at this point from where the selling was started, it start booming because all the selling amount of sellers has been low down. The strength of sellers amount has been low here, and here buyers are active and market will go up. So that means this is known as the chart pattern. That means the chart has been made from various candle, and this is a pattern which is known as the chart pattern. And third, we have to understand the indicator. Third, we have to understand the indicators. Means what is the indicator? For example, this line. This is a line, no? So we just see here when the price was below, when the price was below from this red line, that means price was in downtrend. When price will go up the red line, when price will go up the red line, the buyer will be active and it will be on the uptrend. So after learning this line will be known as the indicator. That is the moving average. So moving average is a indicator. So for understand the candlestick pattern, we should learn three things. One is the candlestick pattern, second is the chart pattern, third is the indicator. For understanding the technical analysis, we should understand three things: candle, chart, and indicator. Okay. As we understand in the last slide, what is the fundamental analysis, what is the technical analysis. Mostly fundamental analysis will be used by the long-term investor and technical analysis will be used by the traders. In fundamental analysis, we just understand the earning of the company, net profit margin of the company, balance sheet, cash flow, promoter holding. And in technical analysis, we should understand the Bollinger Band, EMA, Fibonacci. These are the indicators. So if we are going to work as a trader, as a swing trader or long-term trader or intraday trader, we should understand, we should learn these things. These are the indicators. But if you are an investor, if you are going to wait for 10 years, 5 years like that, then we have to understand these things. Next, for a fundamental investor, there is no use of external news. For example, in any case, there is a bad news for a company. That means in second day, market will be crash down. If market will be crash down, then trader will short the share and they will get the benefit from that short down. But in that case, in fundamental investor case, fundamental investor will be happy, more happy. They will buy more share at the downline because they understand the company. For example, just take one example. There is one company that is, for example, ABC company, and the promoters of that company have 56% stake. And you just learn one news that they have less their stock. In second day, they just sell their 5% stock and now they have 51% stock. Stakes, sorry, in 51% stakes in that particular company, or they just pledge their 5% stake in that particular company. So then what you will do? You think, oh, that means promoters are not confident of that company. They are going to sell their stake or they are going to pledge their stake. That means we should not buy these stocks. As a fundamental analysis, as an investor, we think like that and we will avoid that stock to buy. But in the case of technical analysis, what we'll do, when the price will come down and when the indicator give us the signal, we'll short down and immediately get the profit from downside also. So this is the news based. There is no news in the fundamental, there is use of news in the technical. In commodity, there is no fundamental commodity, but in technical analysis, we just use the technical for the commodity. Okay, you use the chart pattern, technical pattern, all these things for the commodity. So these are the fundamental, which fundamental is only for the investor, and technical analysis will be used for the traders. Traders means if you are going to buy today and sell it after 7 days or maximum 3 months. Buy today and maximum 3 months we are going to sell, then we are the trader. We can known as the swing trader. But long-term investors, they are going to buy and just they are hold down. Like for example, Warren Buffett sahab. So they have just hold down for 10 years, 15 years like that. So they are the investor. This is the basically difference. There is no news in the fundamental analysis. There is use of news in technical analysis. We should learn earning balance sheet like this in fundamental analysis. We should learn the indicators and candlestick pattern, chart pattern in the technical analysis. There is no fundamental analysis for commodities. There is fundamental analysis for technical, okay, technical swing trader. So these are the difference of fundamental analysis and technical analysis. Now let's understand the candlestick. So now we are going to understand the candlestick. Second day we are going to understand the chart pattern. So in candlestick there are 18 candlestick pattern. Okay, if you see this type of candle, for example, there is a chart, one candle, second candle, and suddenly you just see the candle. That means what we understand? For example, price open here and seller take it down till here. That means this was the open price, this was the low price. Again, buyer active here, they just take the price here. That means this is the high price, but in the evening the price goes down and close it at the opening level. That means opening and close is the same. So this type of candle will be formed. It may be like this also, it may be like this also, but similarly opening and close will be same. So if this type of candles form, we should wait for next trend. Either the trend will be continue. If there is downtrend, trend will be continue, or it will be reverse. So doji, spinning top, these are the neutral candlestick pattern. Similarly, these are the bullish candlestick pattern. There are total 8 candlestick pattern which are bullish. That is known as the hammer, inverted hammer. Okay. Similarly, bearish. For example, this. If there is downtrend, market is coming down, and immediately you just see this type of candle. That means what happened? Here, price open here, seller came down here, price close here. After that, buyers active here, start buying, take the price here, and in evening price either close here or close here. So that means if close here, so there will be formation like this. Normally not close here, here only. If price close here, let's understand this. So this was opening, this was low price, this was high price, and this was the close price also. That means there is buying sentiment. So if this type of candle form, this is known as the hammer. So what we can do? We can just wait for the breakout of this candle and we'll buy here and wait for our profit or target. So these are the candlestick pattern which are the bullish, hammer, inverted hammer, doji. So in the next class we are going to understand each and every candlestick pattern, how they made, what is the logic behind, and how we can trade this type of candles. Similarly, the opposite is the bearish, how we can sell, how we can understand the logic behind making of these candles, and how we can trade of these candles. One more thing, if these candlestick patterns create at a particular level, okay, that is called the resistance or support, downside support, upside resistance. If they created at a particular level, then it will be more beneficial, more profitable. So we will also understand in next class what is the support, what is the resistance. We are going to understand the chart pattern also. So many things are going to learn in the next class. For this particular class, let's bind up here. So these are the technicalities. For the next video, after next class, we are going to make another video where we are going to discuss each and every candlestick pattern so that your trade will be easy. Okay, so hope you understand all these things, and if you have any doubt, then you can just comment us, just write down below. You just comment us, we are going to reply you one by one in that particular, either via WhatsApp or via particular message. Okay, so these are things. In the next class, we are going to understand the chart pattern, indicators like this. Okay, support resistance like this, time frame like this. We are going to understand. We'll also understand how we can earn 50% profit in 1 year by just using this chart pattern, candlestick pattern, and indicator. If you are willing to learn more, you can just WhatsApp us at this number 8929633781. You can just prefix India code, that is the +91. All these courses are free now. There is no any charge, 100% free. Our aim is to educate all free of cost. There is no charge. So you can just WhatsApp us and we are going to teach you all these things step by step. Okay, or you can also, if you want to know more details, you can just visit kulma.com. This is our website where you can understand all about our courses. Hope you understand. Thank you. Please subscribe and like the channel. Also share the channel. So channel will be good. This is a new channel. So it's my humble request to please share it. So it will be reached to the masses and channel will grow also and our learning will also be good. The course is completely free. I am assuring you again, this course is now completely free and you can just WhatsApp your number. We are going to make a WhatsApp group and we are going to add you in that group. Thank you. Thank you.